Hello and welcome to my channel again. How to start Forex trading, step-by-step guide for beginners. Step 1. Understand what Forex trading is. Forex, short for foreign exchange, is the global marketplace for trading national currencies. You trade currency pairs like euro to US dollar, aiming to profit from price fluctuations. Forex is a decentralized market and is open 24 hours a day, 5 days a week. It's highly liquid, meaning you can enter and exit trades quickly. But it's also volatile, which means high risk. Take time to learn key concepts such as currency pairs, pips, lots, leverage, spread and margin. You can watch my other videos to learn each. Step 2. Learn the basics through free or paid education. Here are a few ways to learn. Free online courses like Baby Pips, YouTube tutorials such as this one, ebooks for Forex trading, or mentorship classes. Step 3. Choose a reliable Forex broker. Not all brokers are created equal. Here is what to look for. First is the regulation. Ensure the broker is licensed by a regulatory body such as FCA, ASIC, CYSEC and NFA. Second is the spread and fees. Lower or normal is usually better. Third is the trading platform. Most uses MetaTrader 4 or MetaTrader 5. Fourth is customer service. Step 4. Use a demo account. Don't risk real money yet, open a free demo account. Practice placing trades, test strategies and get used to the platform. Step 5. Create a trading plan. A good trading plan outlines how you'll enter and exit trades, how much you'll risk and what pairs you'll focus on. A perfect trading plan should include the following. First, entry and exit rules. Second are your risk management. And last is your time frame. Examples are scalping, day trading, swing trading. Having a solid plan prevents emotional trading and improves consistency. Step 6. Start with a live account, but keep it small. Once you're confident with demo trading, it's time to go live, but start small. Use only money you can afford to lose. Many brokers allow micro accounts, where you can trade cents per pip. Always use stop-loss orders. Risk only 1 to 2% of your capital per trade. Never over-leverage. Step 7. Master risk management. This is what separates successful traders from gamblers. Set stop-loss and take profit levels for every trade. Use proper position sizing and avoid over-trading. Protect your capital first, profit second. Even the best strategy fails without good risk management. Step 8. Analyze and improve constantly. Keep a trading journal. After each trade, record entry and exit points or reasons for the trade, what went right or wrong, emotions you experienced. Step 9. Be patient and keep learning. Always remember, my friend, Forex is not a get-rich-quick scheme. Most beginners lose money at first. Stay disciplined, keep learning, and avoid chasing losses. Over time, with consistency and patience, you can improve your chances of success. Don't forget to like and subscribe.